We've never seen the margins of some of these companies, Tom, but I think more importantly, we haven't seen the consistency in earnings that I think people are missing. I think at the end of the day, this fourth year of the bull market that started in October of 2022, part of our big secular bull market call that we've had in place since 2009, 2010, we're transitioning. We're transitioning to more of an earnings-driven market, and traditionally and historically, an earnings-driven market, still positive, but not as positive as a multiple-driven market, momentum-driven market, which we've clearly been in since early 2023. So I think investors are having a hard time understanding that. But I think the biggest thing, too, is that the broadening out is real. And it's showing up in the fundamental numbers where you're seeing smaller areas in the market, not just the S&P 500, but smaller cap companies are actually showing great earnings and better earnings than the large cap. But more importantly, something that you and I and Paul's been involved in the conversation too is we talk about price to free cash flow, and cash on these companies continue to grow. And that's something to us that is very, very, very positive in terms of how we talk about our small mid-cap portfolio that we offer clients.
Brian, one of the things we have seen over the last 3 months, let's call it, is a little bit of a rotation out of some of that growth parts of the market into some more cyclical sectors of the market, maybe even small and mid-cap. Is that a short-term trade? Is that a longer-term rotation? How do you think about that?
I think it's a longer-term rotation. You know, the market had these fits and starts into small cap through the years, as the last couple of years in particular, when the 10-year Treasury went down and then everybody just kind of assimilated to you buy small caps because rates are down. No, you buy small caps from a fundamental perspective because they have better growth, more attractive valuations, again, going back to the operating performance with respect to return on equity, return on invested capital, all these things. They're looking really, really great, Paul. And I think that 10 years from now, we're going to be kicking ourselves that we didn't own more small cap companies.
Brian Belski with Humilis. We're waiting on Peter Navarro. We'll go to him at 8:15 here, the trade representative for the President of the United States. Paul Sweeney with Brian Belski here in New York City.
Earnings seem pretty solid, Brian. Yeah. We're 60, 70% of the way through the S&P 500 reporting double-digit earnings growth. I mean, corporate America continues to come through here. Are these good quality earnings? Are they enough to support this marketplace?
We think they are, and I think earnings are actually going to continue to grow because we're going to continue to see them from other areas, including financials, parts of industrials, consumer discretionary, and communication services. It's not just all about tech. We haven't even mentioned it yet. So how amazing is that we haven't talked about tech? But at the end of the day, we think the broadening out, and we're seeing a broader distribution of earnings, which is very, very positive. A number of years ago, we talked about how we need to see more of a normalization of the market.
Yep.
And I think that one of the last times I was here live in studio, we talked about the 95, 96 market when I was at Dane and you were at Rauscher, Tom, and we talked about how that market was probably the last time we've seen more normalized trading.
I look at this, folks. I want to go to Humilis. So what the story here is Belski, he didn't like his Montreal Canadian ticket, so he said, see ya. Humilis Investment Strategies. And the website's really pretty cool. And you have something that I'm huge on, away from the mathematics of any finance school, intentional concentration.
Yeah.
Discuss intentional concentration when Apple's up 16% 12 months trailing and Microsoft is flat 12 months trailing.
It's a great question. That's why our tagline is investing with conviction and humility. You know, in my old institutional days that I ended late October when I left my prior employer and started off my own shop, when you go into an institutional account and you talk to a fancy portfolio manager at one of the big banks, they own 200 stocks.
Yep.
And to me, that's not conviction. And so we typically and historically have run portfolios now since 2005, Real Live Money, that we like to run 50 stock portfolios. Our back testing in terms of all of the fancy portfolio analysis tools that we have and still have shown that 50 number is a pretty good number. So we have an opportunity to have this thing called tracking here to answer Tom's question. So you can place your quote unquote bets. I don't like that phrase, but it's probably the best way to say it. So do I want to own 8% Apple and 4% Microsoft, or do I want to flip around? We want to continue to own both those names. But from the conviction side of things, we can own less or more through time, but add and delete the actual position. So that's how we've run money. That's how we've been able to outperform for so many years. And we're very blessed and fortunate to have a great team and a great process and discipline.
It's okay.
So we're 8 minutes into this. Let's talk technology here. Software as a service, boy, they took a hit on the chin there over the last several weeks. AI, you could make the call. I don't know what AI is going to be. Therefore, I'm not sure what the risk is to anything I own, particularly technology.
Well, it seems to me, Paul, like the markets has a checklist. Okay, now first we're going to pick on the big semiconductors, then we're going to the Mag 7, then we're going to go to the chips, and then we're going to go to financials. Then what's next? Is it going to be healthcare? Is it going to be industrial? Is it going to be energy? So I think the market's done a good job kind of doing that. We don't know, but we've always said control what you could control. So at the end of the day, you don't have to own all the Mag 7. You can own some of them. We don't own all the Mag 7 in the portfolios that we run, the 5 U.S.-centric portfolios and 3 North American portfolios we run up in Canada. But at the end of the day, we think AI is here to stay. We think it's going to be more of a diversified thing. And oh, by the way, too, I think we made binary decisions on OpenAI.
Right.
And I think for last year it was all in. Remember last year when everybody sold Google? We doubled our position in Google and everybody sold Google.
Well, there was
based on
Apple in April when Mr. Cook was going to get fired and China was going to be terrible. I got 20 seconds.
Yep.
Should we have 24-hour trading like Bitcoin in equities?
I don't think so, because I want to sleep a little bit, and I think let's afford people a little rest. No, I don't think 24-hour.